Let's talk about Bajaj Finance. That's the other one which is under pressure in trade today. The numbers were okay with a slight negative bias, I'd call it that, but the commentary is where a lot of the fine print got clarity from. Now let me talk a little bit about the NPA ratios, which declined on a sequential basis and declined quite substantially. Now the explanation that the management gave was that the rise in GNPA and NPA is seasonal in nature, and it's because of the higher number of days that are there in Q2, 2 months of 31 days each, and which is why we see what we see is what they suggested. This is typical, and this has also been the case over the last 2 to 3 years, is what they explain. The MSME problem is manageable, is what they're saying, and it's not changing the credit cost guidance in any manner. This was critical because this gives you a perspective and a lens that they are completely in control, because the credit costs saw an inch up on a sequential basis, and so did the NPA ratios. So this kind of gives you clarity, and the biggest pain point was MSME. So they're saying that that problem is completely manageable. FY27 credit cost expected to be much lower versus FY26 is what they said. 1.85 to 1.95 is what they've guided for in terms of percentage in FY26. They've stuck to that guidance despite the 2.05% they've clocked in this quarter as well. So they've stuck to that. In terms of growth, they've trimmed their growth guidance, revised to 22 to 23% from the earlier 23 to 24%. Growth impacted due to slower growth in mortgage and MSME, which is around 31% and 14% respectively of the portfolio. You've also got MSME growth guidance at now 10 to 12%. They're confident of delivering sustainable growth going ahead, is what the management said. In terms of festive, and this commentary stood out as a positive for me. Strong festive season performance is what they're seeing, especially on consumption loans. They've disbursed 63 lakh loans, which is up 27% YoY, which is in volume terms, 29% in value terms in the festive season itself, again on a YoY basis. The momentum they're saying is sustaining even post the festive season. Consumption patterns are quite promising across segments, is what they're saying. The opportunity size, well, Bajaj is currently at 13% of monthly number of loans in India and 4% in value terms. So they've highlighted that the runway, the tailwind, the runway is large enough. That also is something that they highlighted as part of the management commentary. So they've got all of that playing out where Bajaj Finance is concerned. Of course, the trim in the loan growth guidance, the MSME issues, if at all I can call it that, the inch up in NPA ratios were big negatives, and that seems to be denting the kind of move that we're seeing on a Bajaj Finance.